Good morning, candidates. Securities Exchange Board of India. The latest balance sheet available in the website of Sebi is only this as on 31st March 2023. Under Schedule 18, they are telling Sebi prepares the annual financial statements in the format prescribed by the Government of India in consultation with the C and AG, that is Comptroller and Auditor General of India, and accounts are audited by Comptroller and Auditor General every year. What are the significant accounting policies? Accounts are based on accounting policies generally followed in India, which in normal parlance are known as generally accepted accounting principles, Indian GAAP. The significant accounting policies consistently followed by the board unless otherwise stated are mentioned below. The financial statements are prepared under the historical cost convention on accrual basis in accordance with the applicable accounting standards issued by the Institute of Chartered Accountants of India and generally accepted accounting principles unless otherwise stated. Then use of estimates, the preparation of financial statements in conformity with Indian GAAP requires SEBI to make estimates and assumptions that affect the reported amounts of assets and liabilities within bracket, including capital commitment and contingent liabilities disclosures, income and expenditure in the financial statements. Though it is believed that the estimates used in the preparation of financial statements are prudent and reasonable, actual results could differ from these estimates. Differences between the actual results and the estimates are recognized as income or expenditure in the relevant account head in the period in which the results are known or materialized. Revenue recognition, income and expenditure having reasonable certainty have been generally recognized on accrual basis. Fees from all intermediaries are recognized as income in the manner prescribed in the respective regulations unless otherwise stated. Registration or renewal fees received from all intermediaries are accounted in the first year of registration or renewal, irrespective of the validity of the registration or renewal period. That means in the income, they are taking into account the income as income, though it may be useful for the party in the next year. Filing of fees for primary market offer documents are accounted as income on receipt basis. Please remember these terminologies. Filing, filling fees for primary market offer documents. Primary market offer documents are accounted as income on receipt basis. Refund of excess filing fees or a collection of additional filing fees arising due to change in the size of the issue is accounted as and when determined as payable or receivable as the case may be. Point number C, fees from brokers, cash and derivative segments under Schedule 3A 4A of SEBI regulations as amended during 2006 are accounted on accrual basis. Unbilled revenue is recognized in respect of those services for which SEBI has fulfilled its performance obligations. Revenue is earned and SEBI has a right to raise invoice to the intermediaries for the amount of revenue recognized. Regarding investments, they are telling long-term investments are carried at acquisition cost. In case the acquisition cost is more than the face value, the premium, the excess of acquisition cost over the face value, is amortized over the remaining period of maturity. Such amortization of premium is shown as adjusted against the investment value to arrive at the carrying value of the investment. Then, in case of investments purchased at a discount, that is, acquisition cost is lower than the face value, such account is not amortized as income and investments are accounted at acquisition cost. This is a good thing. Next one, fixed assets are stated at their original cost, less accumulated depreciation and provision for impairment, if any. The cost includes expenditure incurred on the acquisition and construction or installation and other related expenses in bringing the assets to working condition for its intended use. The depreciation they are telling here, building office premises 29 years, computers, peripherals 3 years, vehicles, furniture, electrical fittings 5 years, and then renovation expenses 5 years of or lease period, whichever is shorter. As per the depreciation policy approved by the board, the residual value of the fixed assets is considered as 5% of the original cost, and accordingly, fixed assets are depreciated up to 95%. Then, capital work in progress comprises outstanding advances paid to acquire fixed assets that are not yet ready for their intended use at the reporting date. Library books are recognized as revenue expenditure and charged to income and expenditure account in the year of purchase. All the assets, including any kind of turnkey projects purchased or sold during the year, are depreciated on a pro rata basis for the actual number of days the asset has been put to use. Costs relating to acquisition of software are capitalized as intangible assets. That is, software costs are amortized over a period of 3 years based on the straight line method. If the software is purchased outright from the market, the cost of purchase and any cost directly affordable to bring the assets in working conditions for the intended use will be the cost to be capitalized. The date of purchase will be the date from which it needs to be amortized for. So this is one point. So candidates, I find all these points are very interesting and relevant also. So if you go through this thoroughly, you will understand about Sebi and you may be able to answer the questions relating to it. If I go on reading it for long, it may appear boring. So I will stop it at this stage, maybe after completing one point, that is point number 6. Here, if the software is developed in a phased manner, cost attributable to respective phase for bringing it in usable condition will be the cost to be capitalized, provided the software can be operated for its intended use independently for the remaining phases. Please read this and understand. Next point is software which is development phase not ready for the intended use or cannot be operated independently for the remaining phases as on the balance sheet is disclosed as capital work in progress. So I will stop with this now. We have come up to page number, I think 35 or 36 only. Or point number 6 we have completed. Maybe if time permits, when I go for one more reading, I will read the other points. I request you to go through this thoroughly and other aspects relating to Sebi. And if you want mock interview guidance, you can take 2 mock interviews with me, and the charges levied or say 600. 1 minute. Let me check up and tell you. I don't. I'm not remembering exactly what is the amount I have written for our Sebi. Normally, it is say somewhere around 600 and yeah. Let me see that. Sebi, the fees is somewhere around 600 and just a minute. I'm just seeing it here. I think you may not be able. Yeah. No, here, I think I should see it here. Yeah. Sebi is 610 rupees. Thank you. Best wishes. I'll stop with this. And if you have any questions, you can WhatsApp to 90030375557. Thank you. Best wishes.